Today is the 19th of July 2021. My name is David Hickson, and in today's market update I'm going to be taking a quick look at three instruments. We've been running a poll on YouTube over the last week or so, which reminds me that if you are not subscribed to us on YouTube, then you should hit that subscribe button and make sure that you click on the bell icon to make sure that you are notified not only of new videos that we post to our YouTube channel, but also of other things such as the poll that we've been running over the past week or so. We asked you which instruments you would like to see in these market updates, and the three winners are, I think I'm correct in saying, first of all Bitcoin, secondly the S&P 500, and thirdly gold. Thank you very much to all of you who took part in the poll, and also to those who commented and suggested other instruments that we could add into these market updates. We're going to be doing our best to work our way around to all of those instruments. Before we take a look at the markets, I must ask you to please make sure that you have read and understood these disclaimers. There is one other thing I'd like to mention before we take a look at the markets. This weekend we started publishing a new analysis resource. This is a curated collection of analysis, if you like, from other analysts. I'm not the only Hurst cycles analyst out there. There are many others, and we have started collecting analysis from these expert Hurst cycles analysts. Our first blog was posted this weekend. If you haven't taken a look at it, I would encourage you to do that. There's some really fantastic information here, and you can click on each one of these charts and take a close look at the analysis that has been performed and is being discussed. So I will put a link to that new analysis resource in the description below this video as well. Please go along and take a look. We're going to be publishing frequent analysis to that new resource, and I think it is going to prove to be extremely valuable. Let's take a look first of all at the S&P 500, because we've been tracking this analysis for many months. It's probably over a year now that we've been tracking the analysis in the S&P 500, and as you will know from previous market updates, I am expecting price to form an 18-month cycle trough fairly soon. Towards the end of July. We've been looking forward to this time period for some time now. In previous market updates, I've discussed the fact that the market has persistently been moving upwards and discussing reasons why that might be. This analysis that you see remains my preferred analysis, and I am still expecting the 18-month cycle trough to form. The three analyses that I discussed in last week's video and in the week before that, I think, are still absolutely viable, so I would encourage you to go back and take a look at those videos to make sure that you understand the analysis possibilities. An interesting thing happened last week, and so let's take a look at that. Let's zoom in here, and of course the interesting thing that happened was that price crossed down below the 20-day cycle FLD. And if you take a look at last week's video, I mentioned that price crossing down below this 20-day cycle FLD would likely be either a D category or an F category interaction. In my opinion, this is indeed an F category interaction. Of course, we track the interactions between price and the 20-day cycle FLD following the trough of an 80-day cycle, which in my opinion formed in the middle of May. And so here is our A category interaction, B category interaction where price found support at the level of the FLD, C category interaction where it bounced away from it, D category interaction where it crossed down below the FLD on its way to the 40-day cycle trough, then the E category interaction, and now of course the F category interaction. We had this slightly anomalous interaction where price came down and found support at the level of the 20-day FLD, which I discussed in last week's video. Our expectation now is that price is on its way down into the next 80-day cycle trough. There is the circle for the 80-day cycle trough, which will of course be synchronous with an 18-month cycle trough according to this analysis. we might well see price come back to the FLD and find resistance there in a G category interaction and then an H category interaction. If you take a look at the bar counts on this chart, you will see that time is beginning to run out for this cycle. We have had 67 days since the 80-day cycle trough in May, and the average length of an 80-day cycle is 68 days. So we are definitely approaching the point at which this trough should form. There have been 28 days since the 40-day cycle trough that I believe happened in the third week of June. The average length of a 40-day cycle is 34 days, and so we have only 6 days running to achieve the average length of the 40-day cycle. If you don't understand why the average length of a 40-day cycle is 34 days and not 40 days, I would encourage you to download the 10 core concepts of Hurst cycles document, which there will be a link to in the description below this video. So now that price has crossed down below the FLD, we are able to generate a target, which we do by measuring the distance from the peak that occurred before the price cross and extending to the downside. That target is not a very impressive target. It is a level of 42.97, which is a level that was very nearly touched in overnight trading. I'm recording this video before the markets open on Monday, and you can see that price came down almost to that level. I think we're about 10 points away from achieving that level in overnight trading. An interesting thing has happened. As you can see over here, price has come down and it has just about touched the 40-day cycle FLD. Now, in order to get what is called a cascade pattern, we would like to see the target for each price crossing of an FLD projecting well below the next FLD. That would ensure what Hurst described as a cascade pattern and continued downward movement of price. As you can see, the target for the 20-day FLD is pretty much at the level of the 40-day cycle FLD, and so we don't have a guaranteed cascade pattern happening here. Nevertheless, it would seem that price has now started its move down into this 18-month cycle trough. I'm not expecting it to be a very impressive or very deep 18-month cycle trough for reasons that I've discussed in many previous market update videos, but I will certainly be watching with interest as price moves down towards that trough. Let's take a look at Bitcoin, and as I've mentioned in previous analyses of Bitcoin, I believe that it analyzes better if we assume that the cycles are synchronized at their peaks. In other words, we pay more attention to the peak markers, these triangles hanging from the top of the chart, instead of the trough markers. And in fact, you can see in this analysis I have done a bit of pinning. In other words, I've needed to influence this analysis in the trough analysis, whereas in fact I haven't done any pinning in the peak analysis, which is often an indication that the peak analysis is a little better. Nevertheless, it's very interesting to watch both analyses, and so let's just change the scaling here to logarithmic, and we can see what is happening in terms of the bigger picture. We had an 18-month cycle peak, of course, in 2017, another 18-month cycle peak over here in 2019, and the most recent 18-month cycle peak earlier this year. And so the bigger picture in terms of what Bitcoin is doing at the moment is that it is, of course, moving down into this 18-month cycle trough over here. The finer details of this trough analysis could be debated at length. In particular, the position of this 80-day cycle trough, which I've chosen not to influence. It's probably a little late over there. It would be better positioned over here. I'd encourage you to take a look at Twitter, at Trading Hurst. Often publishes Bitcoin analyses, and they're very good analyses. I'd encourage you to take a look at those to track the finer details of this analysis. But in today's video, I'm just going to take a look at the bigger picture, which is, of course, that we are expecting the 18-month cycle trough over here. In terms of the more reliable, in my opinion, peak analysis, we are, of course, expecting a 20-week cycle peak. An interesting thing often happens when you look at a dual analysis, which is an analysis of both troughs and peaks on a sentient trader chart, and that is that you will often find the peaks and the troughs are expected at about the same time. Logically, that seems impossible, but the reason why it happens is because these are two separate analyses. We have a trough analysis and a completely separate peak analysis. And of course, the way in which cycles combine, when one cycle experiences a trough, a longer cycle will be expected to experience a peak. If you don't understand that, again, I would encourage you to take a look at the 10 core concepts of Hurst Cycles document. And so let's take a look at some tools to understand what we might expect. First of all, let's start with the zigzag tool, which describes, of course, the 3 price actions that are expected to move price from a peak into a trough or vice versa. Now you'll notice an interesting thing happening with this zigzag. We have this very wide circle for the target, and that is because the software hasn't been able to refine that target very much. And the reason for that is actually very simple. Price has failed so far to bounce out of this trough, which the software has identified as being the most significant trough to occur before the next really big trough, the 18-month cycle trough. And so having failed to bounce out of that, it isn't able yet to generate a very clear target. When we get a little more price action and are able to identify the next peak that is expected to form, which in this case I think is the 40-day cycle peak, then that target will be greatly reduced in size and it will be greatly refined. But the zigzag shows quite clearly what our expectation is, which is that price should be bouncing out of this trough and rising up to a smaller peak and then coming down into the 18-month cycle trough. The fact that it has failed to bounce out of this trough would seem to indicate more bearish pressure than might be expected, which does make us wonder what the true magnitude of this peak was earlier this year. It is phased as an 18-month cycle peak, but that's because we do not have enough information really for Bitcoin to know what longer cycle peak might have formed earlier this year. Let's take a look at the composite model line, which of course takes the information from the analysis and presents it on the chart in the form of this dashed orange line, and you can see the composite model line is pretty much flatlining with a little dip down over here. So the composite model line is expecting the 18-month cycle trough to form over here, and it is providing us with very little information in terms of what's going to happen leading up to this trough. The reason for that is because the composite model line is working with the information contained in the analysis, and the information contained in this analysis is showing diminished amplitude in terms of many of these shorter cycles, as you can see over this period of time here. For that reason, the composite model line doesn't have a tremendous amount of information to work with. There are times when each one of these tools is very useful, and there are also times when a tool is not as useful simply because of the cycle information that it has to work with. So what has been happening in this recent time? Well, let's take a look at another tool, the FLD. And here is the FLD for the 40-week cycle and the FLD for the 18-month cycle. Now the FLDs are painting an interesting picture. As you can see, price has recently been a little tangled up with this 40-week cycle FLD. It has in fact succeeded in crossing below it. And as you know, when price crosses below an FLD, it generates a target to the downside. Now there's an interesting thing in terms of Bitcoin. Because of the very volatile move upwards that we've experienced recently, if we calculate a pure price target, in other words, we take this price level over here and we generate a target based on the level at which price crossed the FLD, then we generate a price target all the way down here at the level of about 7,000. I am not suggesting that Bitcoin is going to get down there. When we have this kind of extreme price movement, I believe it is more useful to consider the projection in terms of the percentage move that we have experienced. I don't know whether this is a valid application of the concept that price targets can be generated from the FLD, but it's certainly an interesting one to consider. The price move down from the peak to the point at which price crossed the 40-week FLD was a price move of 45%. if we calculate our target on the basis of an equal percentage price move downwards, then we project a more realistic target, in my opinion, of about 20,000. It's a little below 20,000 if I remember correctly, a level of about 19,600. Another interesting feature about this chart is that over here, where we are expecting the 18-month cycle trough, particularly if we extend immediately upwards from the 18-month circle, you will see that the 18-month FLD is at a level of 20,000. So that gives us some food for thought. Tracking the trough analysis, we would expect the 18-month cycle trough to occur a little sooner. I think some analysts are counting down in terms of less than 140-day cycle into the 18-month cycle trough. And so the chances of the trough occurring this late and at this low level are a little lower. But of course, a trough analysis is not as reliable, in my opinion, as a peak analysis. And so it is going to be interesting to see what happens in terms of this downward target from price crossing below the 40-week cycle FLD. As price moves into this 18-month cycle trough, we will of course be watching the FLDs and VTLs and other cycle tools for evidence that price is breaking out of that cycle trough, at which point, of course, we would expect Bitcoin to move upwards again as it rises out of the 18-month cycle trough. Now let's take a quick look at gold, and this is the analysis that I prefer at the moment in gold, which is that price formed a very important 54-month cycle trough here in March of last year, which of course was almost synchronous with the trough that formed in stock markets. It then rose up and formed an important peak in early August of last year. You can see, according to this analysis, that has been phased as a 9-year cycle peak. Whether it was actually a 9-year cycle peak is something that would require some further discussion, but it was nevertheless a very important peak. Since then, as I have discussed in previous market updates about gold, price has come down. It has formed a 40-week cycle trough. I had some difficulty identifying the position of that cycle trough because of this sequence of troughs that formed in the market. And just a reminder, in my opinion, gold is better analyzed in terms of cycles that are synchronized at their peaks. And again, I have discussed that in previous market update videos. So I tend to give preference to the peak analysis as opposed to the trough analysis. The trough analysis can be very difficult to define, and it has recently been difficult to define with this trough that formed over here, which was probably, in my opinion, in fact, the 20-week cycle trough, which you can see this analysis is still expecting lies ahead of us. Nevertheless, in terms of peaks, the 40-week cycle peak, which I discussed in a previous market update video, occurred over here. I think that was in early June, and it occurred at roughly the level that we were looking at there, about 1900. So what is expected to happen now? Well, price is moving from this big peak that occurred in August of last year, and it is moving down into this 18-month cycle trough, which I am expecting to occur early next year. One of the very useful tools that we have in Sentient Trader is the zigzag tool. And if we take a look at the zigzag tool for the 18-month cycle, that is this yellow zigzag over here, you can see that the path down into the 18-month cycle trough is expected to consist of 3 legs. There is this first leg down over here, then this leg up into the 40-week cycle peak, and then we expect a third leg to carry us down into the 18-month cycle trough. As the zigzag unfolds, we can begin to generate a target for that 18-month cycle trough in terms of price as well as time. And that target is represented by this dashed circle over here for the 18-month cycle zigzag. And you can see that it is generated by drawing a line from this peak over here through the middle of this central move and extending it further, and there is our target. So that is the target for the 18-month cycle trough. But of course, we are not going to see a straight line movement down into that 18-month cycle trough. I will call on the composite model line here to demonstrate the structure of the expected movement. Now the composite model line shows that price is moving down now from this 40-week cycle peak into this 20-week cycle trough, which we are expecting towards the end of August or perhaps early September. Then it will bounce up into this 20-week cycle peak over here before coming down into this 18-month cycle trough. You can see how the different tools are presenting different levels at which the turns are expected to take place. In my experience and in this situation, the zigzag tool is probably the more accurate. The composite model line is often very inaccurate in terms of price level, as can actually be seen on this chart. You can see that the composite model line indicated a price peak right up here, whereas the actual peak occurred down here. The composite model line, I should remind you, takes the information from the analysis in terms of the amplitude and wavelength of each cycle found in that analysis, and it recomposes that information to show us what would have happened in the past if the only thing influencing this price action had been the cycles that were found in the analysis. And those cycles are assumed to keep beating with the same wavelength and amplitude moving into the future, which is a slightly flawed concept because we know from the principle of variation that the wavelength and amplitude of all of these cycles will change as we move into the future. Nevertheless, it is a very useful tool for giving us an idea of what to expect, particularly in terms of the structure of the price movement, which here is showing us quite clearly, and let me zoom in on this time period. It is showing us quite clearly that price is expected to move down into this 20-week cycle trough over here, then bounce into a 20-week cycle peak before continuing downwards into this 18-month cycle trough. I do hope that you found this market update interesting. Let me know how you feel about the new format where we're going through more instruments and spending less time on each one of them. I do hope that you found it useful, and I look forward to hearing from you.